Welcome in traders. In this video, we're going to go over today's trading session. We are currently looking at ES, and the time frame that we are looking at is the 2000 tick chart. Now, the only supportive indicator I use is the 21 EMA. Other than that, I solely rely on price action and my trend lines to predict the market and look for high probability setups. Now, as part of my pre-market analysis, what I like to do is I like to find the high of day and the low of day in the pre-market session, and I like to mark them. Now, these play a huge role later on in the market because we can see how price reacts at it, if it acts as a resistance, as a support, and it's just great to draw so it can help us as a key tool to essentially figure out if the market is respecting it or if it can later on turn to a support into a resistance or resistance into a support. Now, during this pre-market session, we really don't have a strong bias. It looks like we just have the shortened channels that are in play. So we have a nice spike up with a break and a new high. And if any of you guys are new, we follow trend lines. And once the trend lines break, we anticipate for price to make a new extreme. For instance, we have a nice trend line working higher. Once it breaks, we anticipate for price to test a new high. As long as price stays within the trend line, we anticipate price to keep making higher and higher highs unless it's broken or proven otherwise. Now, getting close to the open, we had a nice spike down, which resulted in a break and a new low. So this is an area where I just wanted to see what price was going to do. As you can see, we established the support, and I'm just going to draw and play the shortened uptrends and downtrends. So we had a nice uptrend working higher, which resulted in overshoot. So we don't use the RSI, but a good indicator that price is either oversold or overbought is when it breaks above your trend line. And this is an area where price can either reverse or usually just has a stronger pullback, which you would have to draw a wider downtrend or correction depending on the direction of the market. So here we had an uptrend working higher and we had overshoot. So we anticipate price to just have a stronger correction. Okay. So then we ended up breaking, making a new low for this correction. And now what do we expect? So we expect prices to push higher and test a new high. Now, this wasn't at the open, it was pre-market. Volume was essentially lower. So this is an area where I definitely would recommend skipping. But let's say it was during the open, what we would look for is a higher low, which would be a candle like this. This is a good one right here. Let me mark it for you guys. So after we break and we make a new low, we're waiting for a strong reclaim above EMA. The stronger the reclaim, the more confidence it gives. So this purple line, which is the 21 EMA, you want to see a nice strong push above it that holds, a higher low that traps the bears, right? Because we're looking to go long, and a nice decent close above EMA, which we had here. This could have been a high probability setup. But like I said, it was in the pre-market session. And as you can see, you had a nice 7-point scalp, which is more than what I even would look for. So at the open, we had a nice spike lower. So when I saw this, first I drew it a little bit shorter. I drew my downtrend like this. But once the measured move exceeded, as you can see, I ended up drawing the trend wider. So I drew the trend a bit wider, but as soon as we touch that support, and this is why it's important to have these key levels drawn out, we had a very strong reaction, which indicates, okay, the bears are not as strong as we thought, and the support is being bought out. So once I saw this and we had a significant push up, and for anyone who's new to drawing trend lines, I had it, or if you had it drawn like this, right? And let me copy this to show you. If you had it drawn like this, it wouldn't make sense to count this as a break in a new high because once again, this leg exceeds this by a lot. As you can see, the measured move is well past the first one. So we're going to go ahead and draw a wider uptrend. So now we're waiting for a price to correct and we're looking to go along at the EMA. But this was part of a two-legged correction where we had a break, some broad price action, and a new low right here. So now what are we waiting for? Well, we're waiting for a push above EMA, which we had here, a strong reclaim, and a higher low, similar to that example I gave before, a candle like this one right here, something like this candle right here, where we trapped the bears, a nice strong close above EMA. We didn't have that, and then we eventually evolved into a spike in a channel pattern. Now, it takes a little bit more experience to, figure these out and how to draw them, but a good way I like to explain it is if you draw the trend line like this, right? If you draw it like this, if you keep adjusting it, you're going to keep getting small breaks, new high, small breaks, new high. And it just you really don't have that much confirmation here. There's a lot of room. So once you see that, zoom out and you have to look at it and analyze it from a geometrical perspective where the market isn't pushing up like this leg right here. It's slanted more to the right. So you have to work with the market, not against it. So once I saw this, I adjusted to a spike in a channel. We did have a small break here, but it's very insignificant because it's not a real break. What you should look at it is, did the market pause or did it break? And we just had a small pause here. It really didn't break price strongly. Bears didn't really break this trend line. So you can just adjust it slightly, and that's what I did. And besides, it's a seamless leg up, and we didn't even touch the EMA. So this gives you the confidence to know that this trend line is still live. And another way to know if it is tighter or if it should be wider is the initial reaction at the EMA. And as you can see, EMA is holding. EMA is a good indicator and it helps you build confidence when you're looking to take a trade. And when it holds, especially in the bias you're looking in, it just gives you more confidence to take it. And as you can see here, counting from this recent high, we have a new high, first entry long. This is the first candle that broke before the previous one above it. We had a push under, right? And then we had, this would be a great second entry long. This is a trade that I actually took. It triggered lower than the previous candle, closed up above EMA, trapping all the bears. And this was the first high probability setup of the day that I took. And slowly but surely, we ended up making a new high. And as far as stop loss, you're placing your stop loss um, 0.25 or a tick below your entry. So this candle right here, we would place it a quarter below the bar, and we ended up breaking, and it was a decent move. It was about, I would say, 7 points from the entry. So we ended up breaking here and making a new high. Let me label that. So now we're waiting for the next market move, and also it's always good to see if you have any resistance or supports, especially ones that get multiple confirmations. What did I have it at earlier today? Well, actually, no, it was later on in the session. So we ended up breaking, making a new high, and now we're waiting for the next market cycle. And as you can see, we have a nice spike in a channel pattern similar to this one, angled down a little bit to the right. So we're just going to geometrically draw it. And as you can see, it fits great with the EMA. It aligns with it. We haven't even broken above the EMA, which shows that the bears definitely are in charge and they're holding down the momentum. So now what are we looking for? We're looking for a correction at the EMA. We didn't have any here, and we're looking to take a short entry. Now, when I had it drawn a little bit tighter like this, I had overshoot again, which is an indicator that this area is a bit oversold. So what are we expecting? We're expecting a stronger correction, which it looks like we're having. As you can see, we have some strong bullish momentum. So we're waiting for it to play out. Now, usually we look for second entry shorts, but when we have overshoot, I like to wait for a lower high confirmation. So counting from this low, we have a new low, first entry short, pullback. This would have been the second entry short, but mind you guys, we have to respect those mini corrections, and this uptrend still didn't get a new high. I mean, although we got close to retracing the 60%, you can use the Fibonacci. We actually did. I definitely like to wait for a lower high confirmation, especially after overshoot. And I actually made a mistake here. This is just a second entry short here. But if it was a lower high, um, definitely consider taking it. But the only issue here is it did have a green body at the end. And, additionally, I would like to see a stronger bearish close. And as you can see, the importance of waiting for a lower high confirmation, we ended up pushing higher and making a second leg. Now, these are good when you see them because it gives you confidence that the bull run is over and the uptrend is over. And oh, if we grab this trend line and we measure the move, we exceeded it a bit, but Mind you, we had a huge downtrend that needed a new low, so it's no big deal. We're more focused on taking a short. So once I saw this, I was looking for a failed second entry long, which is initially an entry where bulls failed to push higher twice, price higher twice. We didn't have that, so we ended up just pushing down, um, below EMA. And what am I waiting for now? Well, I'm waiting for a second entry short. We have a big downtrend that needs a new low. We had two legs up. The uptrend played out. We can't draw the uptrend any wider, which gives us confidence. So now we're waiting for a second entry short. So counting from this low, we have a new low, first entry short. This is the first candle that triggered lower than the previous one. We pushed up. This is considered the second entry short. We triggered higher and it ended up failing. And then this right here is a great setup. This is a double trap. So the difference between a lower high and a double trap is a lower high forms after the correction's over, usually, depending on the situation. This is an example of a lower high. This green candle, after correction, we push lower, and it's a lower high. If you look at the terminology, it's a high lower than the previous one, or a pivot lower than the previous one. But a double trap is the ultimate setup because we are triggering higher than the first and second entry, trapping all the bulls and having a significant close below EMA. So this is another setup that I took today. We're expecting, and this gives you more confidence. We need a new low for this downtrend and for this huge one. So it's almost like a double setup. You could have caught this for a quick scalp, which I did, especially after having a winner previously. Even if you stayed in it longer for a bigger profit, you weren't even close to getting stopped out because we put our stop loss a quarter above the signal bar. It didn't even touch it. And then, as you can see, we had a nice second bearish leg attempting to make a new low. So once I saw this, I just wanted to see what price action was going to do, especially that we made a new low for this secondary channel. And as you can see, price slowly started going higher and higher, and we had another bull spike up. Now, once I saw EMA kind of getting a little bit choppy in the middle of the bars, I decided to zoom out and see if we can have any type of range, right? Because whenever you see EMA getting in the middle of these bars, you can expect a range, which is a resistance and a support where price is holding within. So as you can see, if I zoom this, I can copy this. All right. I just had a range right here. Let me get rid of some of these so it can just be a little bit more clear. Okay, perfect. So price looks like it's holding within this range. EMA is in the middle. So you just have to keep this in mind, especially when you're looking for entries. So we ended up having a nice strong push up, a break, and a new high of it. And as you can see, we got really close to this resistance. We could even bring it a little lower, right? And once you see price break, make a new high, fail at the resistance, what do we expect? We expect price to reverse lower. And that's exactly what we did. And a great way to give you confidence and to let you know if price is going to go lower is when you have some momentum. And as you can see, we have some big bear bars with momentum pushing lower, slicing through EMA, and we have a lower high setup. Now, you can take a lower high alone, especially when you have multiple confirmations. And the confirmations I had is the uptrend played out, right? We failed at the resistance and we have some strong momentum slicing through the EMA. And this was another setup. I was on my break during this, but if you took this, this is definitely a high probability setup. And we ended up breaking lower. We had a break, we had a new low, and towards the close, we had a nice spike up. There's a lot of spike in the channel patterns today, and we also had overshoot here, meaning you might or you will anticipate price to have a stronger correction. And then we had, as we're anticipating to take a long setup, we just want this correction to play out. And as you can see, we have one leg down, a nice pullback, right? This disrupted the first leg, second leg down. So what are we waiting for now? We're waiting for price to strongly push, reclaim above EMA, and we're either waiting for a reversal pattern, which is a failed second entry long, or I'm sorry, a failed second entry short, or a higher low. Now this was like 10 minutes before the close. I recommend cutoff time being around 3:30, 30 minutes before close, especially that market gets volatile. But if this was a normal setup during normal trading hours, we would just wait for price to push higher for a higher low, and we would anticipate price to make a new high for this uptrend. So that was the trading session today. A little bit slow, but definitely some good trades if you were patient and you waited for the right setups. And if anyone's new here, this stuff might sound a little discouraging or it might sound hard, but everyone starts from somewhere. And if you're patient and you have a passion for trading, slowly but surely you will get it. It's a skill that you have to acquire just like anything else, like you go to school for. And if you put in the work, time, and effort and discipline, you can definitely do this full time, just like I have been for the past 12 years now. And I'll see you guys later. Take care.